Watch and listen. I watched last week. You got to stop at the head bop things. We're like the guys from the night at the Roxbury, just going forward instead of like this. Oh, it's kind of long.
It is a long intro. Yes, phone is fixed.
All right, now we're good. Now we'll hit the. Hopefully it sounds good. There we go. Home sweet home. All right. John Edwards, Castle and Cook Mortgage, Jude Sandball, Dream Homes by Jude.
NMLS 671-258.
Nice. We are back after a week off. I know everybody missed us. I did actually get a couple calls. Or not a couple calls. I talked to one of my friends who said, "Where were you last week?"
Disappointed we didn't have.
And then he wanted to know if we got to look at all of his obnoxious comments. And it wasn't Josh. So, Josh, you always want your weekly shout out. Here it is. Brian, thanks for participating. And anybody else, if you find some value, please feel free to comment, maybe something constructive that we can answer. Please keep it clean. We'll take the audience we can get for now. Right. And then, nothing against Josh or Brian or anybody else that's watching. We love you. But, if you find some value, keep watching, share with your friends, like us, go to our YouTube pages and subscribe there. And this week we're talking about
self-employed borrowers.
All right, self-employed borrowers. So that would be us. That's
it would be us to some degree.
That's it would be me.
You for sure.
I guess I'm assuming that. I don't know your structure, how it's set up, but real estate agents can understand or relate to that a lot because we are self-employed, 1099. We run our own businesses. We talked about that last week. The kind of the structures like that. And so, oftentimes I get people all, I'm self-employed. I make X dollar amounts. Oh, and, I want to buy a home. Well, it's just not quite that easy.
Different. Yep.
It's a little bit different. There's some,
you have to take into consideration a lot the write-offs. It's very nice to be self-employed and to have the tax write-offs. The problem is from a lending standpoint, it gets a little bit tricky, and that can eat into the eligible income that you have.
So, whoops, hold on. Getting us. All right, there we go. Now we're up. I got us up. All right.
Looks like we're on the opposite side.
Is it?
It looks like it, right?
Is that my good side or is that my bad side?
Yeah, no, it's probably your good side.
Okay, all right, well, good. As long as it's still my good side.
All right, let's get started here. Rolling into self-employed borrowers. So just because you're self-employed does not mean that you can't purchase a home. We get that question a lot. So what we're going to talk about today, the importance of working with a lender right up front, right from the beginning to determine what you're eligible for from an income standpoint. What is a lender looking for? What other options are available if traditional financing won't work? And now that you're pre-approved, it's time to get with your agent and find a home, and we'll do a quick recap. So our first topic here, the importance of self-employed borrowers working with a lender. So I would say, and I can't stress this enough, it's essential that you work through a pre-qualification as quickly as possible and begin working towards that pre-approval as soon as you can. The difference being a pre-qualification is you basically tell me as the lender, I make X amount of money, I have X amount of money in the bank, but we haven't verified that. So to get pre-approved, we want to gather the documentation that supports what you told us, make sure that what you've provided is eligible and we can actually use it, and then we can get you a pre-approval.
Right. So the difference is verification with the documentation that you've pulled all together. And that's huge. I mean, so from our perspective, from a real estate agent's perspective, that's huge to have somebody pre-approved rather than pre-qualified.
I would say on both sides, whether you're the buyer's agent or the listing agent.
Sure.
If you're a listing agent, you want that offer to come in and you want to know that they've been qualified with a lender and they're truly good to go. On the other side, as a buyer's agent, if you're going to go spend time driving somebody around and showing houses and stuff like that, you want to make sure that you're respecting everyone's time.
Let's digress for a quick second because I think that's a great point. And I know the answer to this question, but I'd like you to share.
Okay.
What questions can be asked to verify whether somebody has been pre-approved or pre-qualified? So you're listing your home, you have an agent, and you want to make sure that agent is making sure that the buyer is pre-approved. What questions need to be asked?
I think the most obvious one would be a lender letter
Okay.
that supports that it is indeed pre-approved, that the buyer has, gone through the motions. The lender says, yep, they are pre-approved, and it basically have gone as far down the line as they possibly can. You could also ask, I've seen listing agents ask for proof of funds. So to show that the funds for the down payment are truly available and they are liquid. So those are some things that you can do on the listing
What about
side.
proof of an automated underwriting decision?
I don't know. I've never really provided it. We could.
Yeah.
We could provide that.
Or at least a verbal.
No one's ever asked me for it.
Really?
We could.
I ask all the time.
Do you?
Yeah. I ask for,
Yeah.
Usually I ask for verbal, and I start getting, and then I'll ask which one.
Oh, I've had verbal for sure.
And then they'll be like, if they start going, I'm not sure, I'll ask for, a screenshot or a PDF of the automated.
Yeah, you got to be careful as a lender not to provide personal information or anything that, that the buyer themselves wouldn't find appropriate. But
sure.
Yeah. All right. Anyway, provide requested documents, especially tax returns for business and personal, as quickly as possible. So note that we do need tax returns for business and personal. Income is determined differently for self-employed borrowers, and it is very much dependent on the information within those tax returns. So we really need 2 years of tax returns. In some cases, we can get away with 1 year tax returns. Do not make the mistake of thinking that your gross revenue is how much you make. That is not going to be the case.
Right.
So your revenues may have been $200,000 last year,
Mm-hmm.
but that doesn't mean that we can use $200,000 divided by 12 for your monthly income.
Right.
There's a lot more that goes into it than that. Lenders use Fannie Mae, FHA, VA guidelines to determine income. If we're doing a portfolio loan, then that portfolio lender would have their own guidelines in terms of determining income as well. So it's not like a W-2 income earner where, you get $200,000 a year, your W-2 income. In that case, we are taking $200,000 dividing by 12.
Right.
But if it's self-employed, it's different. So
now, is an underwriter going to scrutinize maybe this file a little bit more, go into a little more detail in looking at tax returns and some other things?
Only because they have to. Yes, they are. They're going to scrutinize it more because, and part of that too is we need to look at every source of income or loss that shows up on the tax returns.
Mm-hmm.
So you may have, multiple rental properties, two or three different businesses. All of those need to be taken into consideration. In most cases, there's some exceptions there, depending on what your ownership level is within the companies. But that's got to be taken into consideration. You may have one company that's doing great and two that are doing crappy. We're going to have to weigh all of that, so we have to take all that into consideration. So what is the lender looking for? The lender is going to dive into those personal and business tax returns. Typically going to take into consideration income and losses for every business, taking into consideration the write-offs, some of which we can add back and use that as income, but some of which we cannot. An example of that would be depreciation. So if you've got depreciation showing up on there, typically we can add that back. But if you've got, meals and entertainment, we're not going to add that back and really use that towards income.
That's a bummer.
Hard to imagine, right? The net business income is a good indicator, but not always the final income number. So if I'm taking an application a lot of times with a self-employed borrower, from an income standpoint, I'll usually ask, do you know what your net business income was over the last couple of years? And I can get an estimate from that without having the tax returns, but we're not sending any letters or doing anything until we've seen the tax returns.
Right, that's huge.
In most cases, we will need to average the income over the last 2 years, although there are some cases in which we can do 1 year tax programs. If multiple businesses or rental properties, we will need to run the numbers on each of them. And then time in business is important. So we want to know how long you've been self-employed and registered with the state. Credit scores are going to come into play, debt ratios, loan to values, those things that come into play in a typical loan as well. So what other options are out there? So in this case, we're sort of looking at it as if the lender has run all the numbers, they've updated the income, and traditional financing isn't going to be an option, it doesn't mean it's the end of the road. So what we mean by traditional financing, we've talked about it before in the show: conventional, Fannie Mae, Freddie Mac, FHA, VA. Those are your typical loans, but there are some other options. So many lenders have access to portfolio loans, which are simply loans provided by various lending institutions that are willing to create loans that don't fit into traditional lending guidelines. They're willing to take on that additional risk. A couple examples would be like a bank statement program, where they are going to go off of the amount of income that you have on the bank statements.
Okay.
Another, and this is mostly for investors, would be no income or what they call cash flow loans. So they're going to cash flow like your current rental properties and in some cases businesses and stuff like that, and they won't need to collect tax returns.
Now, is there going to be different criteria to qualify for these loans, or
Yes.
is it going to be a little more stringent?
Yes and no. I mean, in some cases it'll be tighter guidelines, in some cases a little bit looser.
Okay.
It just depends on what that situation looks like. But borrowers will typically need to put more money down when we're talking about portfolio loans.
Yeah.
The interest rates are typically going to be higher. The costs are typically going to be a little bit higher. But depending on what your situation is, both financially and for your immediate housing needs, it may very well be worth looking into those as an option.
Now, is there also some niche kind of lending products, like maybe for doctors or attorneys, or maybe some other kind of really specific
There are
area
those are
of
kind of
expertise?
going away. They used to be a little bit more popular. There are some lenders out there that offer like especially for like newer doctors. You're sort of just getting into the profession. Maybe you're just getting out of residency and you just started your job and you've got a job lined up, but there isn't really any history there. There are some programs out there. Some lenders will they'll basically take into consideration your expected future income to get approved for a loan today.
Okay.
We don't have a program like that, but if you want, we can help you try to track one down if we need to.
Okay. What about for real estate agents? Any niche product for real estate agents?
Really, bank statement programs might be helpful in that.
Okay.
Or if you have rental properties, that cash flow program could work well.
Right. Okay.
So,
Or for investors, right?
Or for investors. Yeah. So now that you're pre-approved, get with your agent, find a house, and Jude, I'll kind of let you take it from there. What are you talking with once you know your clients are pre-approved? Now it's the same as any other client, right? I mean, you've got a client, even though they're self-employed, they're pre-approved. The lender says they're good to go. What are you talking with them about?
Yeah, that is the biggest hurdle. Always, the first thing is, have you spoken with a lender? If you have spoken with a lender, have you been pre-approved? And then talking to that lender and asking some of the same questions I'd ask if I'm a listing agent, which is, okay, what have you done? What documentation have you put together? Because in the market, the way that it is now, how competitive it is, we need to be able to pull the trigger immediately. And then once we get an offer accepted, be able to hit the ground running. From doing inspections to getting appraisal ordered right away, and just knowing that we're not going to have that lag time of 2 or 3 or 4 days, because sellers want to keep that time frame as tight as possible oftentimes, and know that we're going to be able to get that deal done in the time frame that we say we can.
Yeah. Yep. All right. We'll do a kind of a quick recap here. So get with your lender early and provide all requested items.
Let's just say first
thing you do. Hey, I'm self-employed. I think I'd like to buy a house. Talk to a lender.
Exactly.
Right?
Yep.
And then lenders have a lot to consider when determining your income. So don't assume one way or the other that you can or cannot buy a home. And I can't stress that enough. We have so many clients that I end up talking with that will try to approve or disqualify themselves from buying a house without having ever talked to a lender or a professional. Oh, I can't do it because my credit stinks, or I can't do it because I don't have enough income, or I can't do it because I'm self-employed and I have all these write-offs. Let's take a look at it. Let's see if that's actually the case, because there are a lot of programs out there that can help you. We've talked about down payment assistance programs before, portfolio loans. There's a lot of options out there.
Well, and if it can't get done right now, at least
then let's get on the right path.
Exactly.
Yep, let's get on the right path and say, in 6 months, a year down the road, you can, and this is how we're going to get you there.
Exactly.
If you cannot get approved for a traditional loan, then see what other options are available through portfolio loans. Now, if your lender doesn't have access to portfolio loans, then it's a good idea to go out and find somebody that does.
Right. Did we define portfolio loans? You just
I did. So portfolio loans are there's various lending institutions out there that will basically create loans and allow the guidelines to fit certain niche products. Like you had a bankruptcy that just discharged last month. Well, there's a program out there.
Okay.
It's programs designed that are outside of traditional lending guidelines.
Okay.
So there's
going to be maybe a little more expensive, a little bit.
It's probably going to be more money down, higher interest rates, and higher costs.
But again, that goes back to if you want to get it done. There's probably
it's a good short-term option to a long-term problem, and you'll probably want to refinance out of that initial loan relatively quickly and get into a more long-term loan for yourself.
Okay.
Yep. And now that you're pre-approved, get with your agent and find a home. And we just talked about that and talking
with your agent
about what you're looking for. That gets more fun.
It's the fun. The lending part. The headache.
Not as much fun as looking at homes.
Yeah, looking at the homes is the fun part.
Yeah.
I get the fun job.
That's right.
I get the headache job.
That's right. But all right. Well, I think another great show for us today, Jude. So, we're coming back strong after a week off.
Yeah, that was a good topic. I like it. If we didn't get any questions, but if you have questions on this replay, there will be a link down below there. Just click on that and send it to us. It'll get emailed to me. And if it's a question for John, we'll get it over to John or I'll respond to it. Yep. Also, again, if there was some value to this, please share this, like it. Go to our YouTube page, subscribe there. I did get a subscriber on my YouTube channel. So I'm up to 1.
All right.
So, let's see if we can double that up.
Let's
see if we can double that up, folks, this week. Go to the Dream Homes by Jude Sandoval YouTube page and Castle and Cook.
It's my personal Jonathan Edwards.
So we get to see videos of the kids and stuff too mixed in with.
No, I haven't got much on there. I've got a few of our past episodes, and I've been slacking on the more recent ones. So,
okay, well we'll have to get that fixed.
We'll get them in there.
Yep. All right. Thanks. We'll see you next week.
All right.